Hey everyone, how's it going? Welcome back to another educational video. This one is going to be focusing on continuation structures and pattern, specifically the bullish or bearish flag structure. All right, so I will go into in-depth look into what these kind of structures and patterns do, and I'll point out many examples in different markets to give you an idea of how they will form and what likely they will do. So any question, comments, let me know below, and let's get started. So first, it's important to understand that a bullish or bearish flag is a continuation correction. Okay, it's a continuation, meaning that if it's in the bullish trend, we're going to see a bullish move, and we're going to see a bullish correction, which is that bullish flag continuation before resuming the previous trend. And whereas if it's in a bearish kind of flag, you're going to see that bearish drop and then bearish kind of correction and then continue downwards. So it's a continuation correction. It's very important to distinguish a continuation to a reversal. So I made video on continuation reversal correction. Make sure you tune into that. I'll put the link below. And as price action trader, we really need to be able to identify what correction we're seeing. This will allow you to get ahead and make your forecasting so you're prepared for any potential moves. Okay, so for example, here on gold, a typical kind of bullish flag that I see is that we see a strong momentum push to the upside. So you're going to see a strong bullish momentum. So we know a bullish impulsive phrase. And then we're going to see a correction in the making. So this is a correctional phrase. It is forming a bullish flag kind of continuation structure and then resuming the bullish trend. And then again, it's repeating the process. You're seeing that same kind of bullish kind of flag structure in the making to correct all this move and then start taking off afterwards. Okay, and looking at what the price is doing currently in the most current price condition, it's the same thing over again. It's just varies in size. This becomes a strong bullish push, and this is a larger kind of flag in the making, and we're actually breaking out of this kind of potential flag. And for my kind of strategy and style, I will be looking for a continuation flag. So a larger impulse, a larger flag, looking for the continuation, and then on a lower time frame, a lower time frame impulse, looking for a lower time frame flag, looking for continuation. Same idea here. So it's important to understand that these bullish or bearish flag structures, they will appear everywhere and every time frame and varies in sizes. Okay, so you'll see that on a higher time frame. So example here on pound yen, you'll see that on a higher time frame, this is a strong bearish move. So this is a bearish kind of impulse, bearish kind of impulsive phrase, and this is a higher time frame, large kind of flag, right? We see this larger flag in the making. So typically a flag, in my personal understanding of it, at least you want to have minimum of 2 swing highs and 2 swing lows to connect the swing highs and swing low of the price. So usually they're going to be relatively in parallel structure. So they're going to be relatively parallel, but sometimes you're going to get a little bit more slanted. It varies in that because the market itself is not perfect. Okay, so sometimes you're going to see textbook structure like this and then takes off. Sometimes the flag is more slanted or more unevenly, but regardless, it's telling you that it's correcting the price and it's likely to resume its previous move. Okay, so a couple examples here. Let's say we look at Euro Pound, for example. To me, this is kind of a flag in the making, but it's not complete. So you see that this is a strong impulse down and we're just forming this consolidation. So ideally is for price to really push itself up to the top of this kind of flag on the top of this trend line and then look for continuation down. So this is certainly one of these higher time frame flag that's in the making that is not yet complete. Okay, and a few other examples we can see, let's say Kiwi Swiss. So smaller flag, what do we mean by smaller flag? Well, this is a impulsive move down and this is still a flag, right? It's not a longer flag than what you can see, and this is what I mean by different structures, different patterns. They're not always going to be the same. They're going to vary in sizes, varies in length, varies in time. Okay, so sometimes you're going to see a sharp impulse, just a quick flag kind of continuation, and we're seeing the resume of the trend. Or sometimes you're going to see the correction longer and deeper and lengthier, but still resuming the trend afterwards. Okay, so Third thing, it's important to understand multi-time frame analysis. This is also another video I made. Make sure you watch this. That multi-time frame analysis will help you to be more clear on when you're looking for flag continuation, etc. Okay, because flag continuations, they will appear everywhere in the market. Okay, you'll see them really everywhere in the market. Okay, and sometimes they'll work out, sometimes they won't. And really, to be more precise on your entry, to be more add confluence to your entry is really understand what higher time frame and multi time frame analysis is doing. So, for example, here I'm going to look at dollar yen here, just latest price action. To me, this is a strong impulse, and we're just forming a larger, deeper, wider, lengthier flag, right? As long as the correction is still correcting in this kind of format, to me, this is a correction phrase to be correcting all this move. And when we finish the higher time frame correction, we're likely to get that continuation from the price. But understanding the higher time frame perspective is that when you have a higher time frame bias, let's say for a buy, and then when you go down to the lower time frame and it's showing you some reversal like lower time frame push down, lower time frame correction, it's important to understand that these corrections will happen any time frame, anytime, right? I talk about this is that when you go down to the 5 minute charts, when you go down to 5 minute charts, you're going to see correction regardless. But are they going to work out? For example, this is a flag, right? We have an impulsive move to the upside. We have this period of consolidation. It's looking like a flag, but it's not continue because lower time frame. You have to understand what the higher time frame is doing. Is the higher time frame in the bullish move now, or the higher time frame it's still correcting? To me, the higher time frame is in this consolidation, it's in this correction. So the lower time frame continuation bull or bear flag is not likely to work out massively for your favor. They sure can go up and down, within the relatively range, but they're not going to be the one that's going to take off because the higher time frame isn't finished correcting. Okay, so it's very important to understand this. So let's look at a few more examples here. Dollar CAD here as example. So bearish kind of flag, right? This is clearly a bearish flag. So we see this bearish continuation, bearish impulsive phrase to the downside. And this to me is a clear bearish flag continuation. So impulse, correction, impulse, right? Very standard. And multi-time frame analysis. When you look deeper into what the structure is doing, we have this impulse down, we had a period consolidation, and when the price is about to finish this bearish flag on a higher time frame, the lower time frame gives you that clarity, right? We see this lower time frame impulse down and a lower time frame bearish continuation flag to continue. So this is why multi-time frame analysis works so good, is that you have a bias of the higher time frame, you see this impulse, you see this correction in making, so you have a bias for the sell. To confirm that is to go down to the lower time frame. And lower time frame here, you can clearly see that there is a lower time frame impulse and a lower time frame flag continuation to push the price down. And adding confluence to each other, stacking confluence is very key when we trade price action, when we trade market movement and things like that. Okay, and a few more examples at the end. I want to look at some cryptos. So crypto, this is certainly the trade that I'm in currently, and I want to show you what I mean by a continuation flag, right? So this is a massive bullish push to the upside, and we have this higher time frame flag in the making, right? So like remember I said at least 2 swing highs and 2 swing lows minimum to classify as a structure. So in this case, we have this impulse, we have this correction, and then price massively pushed to the upside. And as I always mention, look for correction after breakout when we complete a higher time frame continuation structure, because it's likely to be taking off afterwards, which is exactly what we're seeing here right now. Okay, so it's very clear to understand that these structures will happen everywhere, every time frame, any market, and any time. Okay, it's important to really look at different time frames. So for me, it's always multi-time frame analysis, top-down approach, understanding what the market is telling me. So if you look at Stellar here as an example, on a higher time frame, we have been all this kind of consolidation period or corrective period. And finally, we're seeing a strong impulse to the upside and a clear higher time frame continuation correction, a flag continuation correction, and then we're resuming the original trend. Okay, so always keep in mind that when you're looking for continuation, you want to first look at the higher time frame to give you a clarity, to give you a bias, and then going down to the lower time frame, going down to whether it's for 1 hour, 30 minutes, 15 minutes, whatever it is, you want to look for confirmation to be entering that continuation move on the higher time frame. Okay, that's going to give you always the best risk reward, the safest entry, and stress free. Really, I don't need to guess where the price will begin. I don't need to worry about trying to be buying here. Where is this larger higher time frame correction finish? What if this just pushed to the upside and then just dropped down and then still resuming the bullish move? And price action structurally nothing changes because we're still in this bullish flag pattern. We're just rejecting to the top, we push down and then resuming the trend. And structurally, we're just completing this flag structure. The structure just evolved into a bigger one, but still resuming when the correction finishes. Okay, everyone. So that is my take on bullish or bearish flag continuation structure. And as always, if you have any questions or comments or feedback, let me know below, and I will chat with you guys next time. All right. Thank you very much.